everybody, and welcome to the 59th edition of LM's Weekly Wrap, our weekly program to cover the developments in the markets, what is expected going forward into the markets. This week, in a way, was very, very eventful for the markets because, as far as the domestic markets were concerned, marks the end of the earnings season. This was a truncated week, and a lot of sectors which managed to hog the limelight during this quarter and during this week also. And we also had a few international developments. So to throw more light on the market related developments, I have with me Jash. Jash, welcome to the show, and kindly take us ahead on the developments in the markets, which will be followed by the sectoral outlook from my side.
Thank you, sir. It's great to be back. I'm going to be starting with the Nifty levels. We have been seeing that Nifty this week has been in pressure. It has been under 19,300 mark, which is slightly on the lower side, and we wouldn't say it is a bearish formation, but it has been a healthy correction. People have been booking profits over here, and we need to wait where the Nifty takes us in the coming week. To throw some light on the global side, US shows resilience. It is showing strength in the economy, but whereas Moody has downgraded the Chinese economy, so the growth levels in China are in a question mark, and we don't know. And it is a very conflicting scenario where US is showing strength and China is showing weakness. So we need to wait and watch over there on how China plays out its economy. They've been taking steps. They have also done rate cuts, but rate cuts obviously take time to show some effect in the economy. So we need to wait over there. Whereas the inflation control in US is showing some hope over there, and we are seeing the strength in the US economy now. Coming to the geopolitical tension, they remain as it is, and that is what is giving jitters to the market in India as well. Coming back to India, as Nirav sir rightly said that it marks the end of the earnings season. We have seen a mixed bag of results. Some results were good, some results were bad, and the stocks have reacted accordingly. So it is in perfect sync. Coming to the debt side of the market, the debt markets are not performing, even though the interest rates were at a high. It has already been factored in. A few months ago, if we would see the yield curve, the short term and the long term yield curve was flat, which was a very different scenario from usual. It was very unusual. So that has started coming off, and the debt market stopped performing, and it is going on the downside. That's it for the global and the domestic scenario. I would like to hand over to Nirav sir. Thank you.
Yeah, thank you, Jash. So yes, as pointed out rightly that no major developments, but I think from what we can infer out of this is that the two very conflicting kind of a situation where they both US and China. They want to decouple from each other. Intent is to decouple from each other because we've seen that China has the manufacturing prowess, but they do not have the IP, that is intellectual property. Whereas in the US, it's the other way around. The US has got the intellectual property, but they've got the technology, but they do not have the manufacturing. Whereas India needs both. So I think these three superpowers are jostling and for a space in the global economy. And of course the US is trying to now catch up on the manufacturing because they have a huge technology base. China is trying to try to catch on the technology front, especially with respect to the semiconductors, etc. So I think it's an interesting situation, but nonetheless, coming back to the markets, I think this has been the end of the earnings season, and as we see a typical pattern which emerges in the Indian economy, First of all, we tend to monitor the progress of the monsoons, because that is when the harvesting, etc., sowing of seeds, harvesting, etc., is done. First is the progress of the monsoon, how the monsoon behaves. That's how the rural economy tends to behave, the urban economy, etc. And then that is followed by the festive season, and after that we have the wedding season. Now wedding season also has a huge multiplier effect on the economy. To start off first with the first part of the wedding season, which was there from April to June, I think that was a washout, and it was impacted largely by the fact that the inflation has been on a runaway inflation in the economy. We've seen the prices of food, jewelry articles, etc., move up sharply, and that has, I think, in a way impacted the wedding season, the first part of it. But I think now we have the the rainfalls, and we've seen some erratic pattern of rainfall. We've seen unseasonal rains. We've seen flooding in some parts of the country, especially the one which we've seen in Uttarakhand and Himachal, etc. Remains a cause of great concern. And now going forward, we will also be seeing the festival demand, because the wholesale trade channel basically tends to start stocking up for the upcoming festival season. Now they will start. So I think corporates would be start gearing up in terms of their production schedules about how to manage the demand going forward. So I think the next few weeks are going to be very, very decisive to understand how the festival demand is going to play out. After that, we will be having the wedding season. So these are all important cues. Starting off with the sector-wise, we have auto sector. Auto sector continues to do very well. In fact, this week we had some very good commentary and good presentations coming in from Mahindra and Mahindra, which incidentally was also one of the big gainers of this week. So I think auto continues to be in great shape, whether it is Mahindra and Mahindra or Tata Motors, Maruti. We had one particular session where the auto sectors really saved the day for the market. So I think continue to do very well. Escorts Kubota has been inching up very, very nicely in trade. We've seen good commentary coming in from Eicher Motors, etc. So I think auto continues to be in great shape, at least at the moment. And this, of course, auto ancillary also not far behind, continues to do well. Second sector is banking. I think banking sector has been very quiet in trade. We've seen private sector banks very, very quiet, subdued in trade. As we had indicated earlier also, that the best of the banking sector margins are behind us, and we could see margins contract or come under pressure going forward. Capital goods continues to do very well. It's a sector which is doing very well. We've seen infrastructure. Most of the companies in the capital goods space have been coming out with commentary like, this is the best monsoon season which we have seen, because generally in the monsoons the activity tends to be very, very subdued. But we've seen commentary coming in from Action Construction Equipment, which says that this type of demand has not been seen in monsoon before. This kind of activity, the momentum which is being seen, so it's only going to increase going forward, and that's the reason why we are seeing stocks like Action Construction Equipment or Escorts Kubota, because they also have a construction equipment division, etc., continue to do very well in trade. Infrastructure activity has been going great guns, and I think the multiplier effect is coming into the economy. So we will see companies like Siemens, ABB, etc., also continue to do very well in trade. After this, we have IT sector. While the IT sector has been struggling, we've seen companies like HCL Technologies and Infosys making an attempt to come back by announcing some good order wins, etc. But I think overall still the IT sector continues to be under some stress. Although we saw that HCL Technologies was a very consistent gainer in this particular week. Overall, the trends in IT continue to remain weak. After this, we have the FMCG sector, the fast moving consumer goods space. It is experiencing some sort of pressure because of the food inflation, and they fear that the raw material prices may start inching up again. So I think FMCG space is under some sort of pressure. And we have after this the oil and gas space, where I think Reliance continues to do quite well. I think in fact in today's market, Reliance has single-handedly managed to revive the markets or turn around the markets after there was a fall in the markets. And this is on back of the fact that Geo Financial Services will be listing on the 21st of August. So I think markets looking forward to that development, value unlocking, which is likely to take place as far as Reliance Industries is concerned. Apart from this, I think pharma continues to do quite well. We've seen frontline companies do very well in trade, whether it's the like of Cipla or Dr. Reddy's or Lupin. I think they're still likely to go places from their current levels. Apart from this, I think in today's market, we saw a couple of sectors which are showing very promising potential. One is textiles, and the second is hotels. I think as we come towards the festival season and the wedding season, we will see a lot of corporate events also taking place. So I think the hotels sector is again showing signs of life. We are seeing good momentum in EIH, East India Hotels, Indian Hotels, Mahindra Holidays and Resorts, and in particular one stock, that is Lemon Tree Hotels. I think they have indicated earlier also that their room inventory is likely to go up from 8,400 rooms to 10,500 rooms by the end of this year. And their one of the main properties, Orica, is becoming operational in October 2023. So I think all the approvals are in place, and they are geared up completely for the launch of this particular hotel property. So I think that's going to be a game changer as far as the stock is concerned, and I think we could see the stock rally from these levels. So I think a hotel in a sweet spot, and textiles again is in a sweet spot. We've seen some very good momentum in stocks like Vardhaman Textiles or the likes of Gokaldas Exports or Arvind, our LM Weekender stock idea, which was Arvind, which was recommended at 99 rupees with a target price of close to 152, 153, has achieved its target price during the week and continues to move from strength to strength. So I think these stocks have done pretty well in the market. And apart from this, our usual themes, defense and railways, continue to do very well in trade. A lot of things to discuss, but I think the time constraints will not permit us any further. So do write back to us with your feedback on the program, and I hand over to Jash for the concluding remarks.
Thank you, sir. Thank you for such an insightful session, and we'll be back next week. Please stay tuned. Thank you.
Thank you.